Hello, Scott. Hello, Andy. Hello, everybody.
Hello, guys. Hi,
All
everybody.
right. Happy Tuesday. Welcome to our Trade of the Week weekly webinar starting on time. All right. So, looks like my screen is visible. Let's go ahead and jump into the first few slides here. Of course, the disclaimer screen. Just that reminder that we are only going to be talking about Trade Ideas technology and a few scans, a few stocks, a few charts, a few concepts. We're not to be considered registered investment advisors. So the bottom line is this is not financial advice, financial planning for you guys. If you need financial advice or planning as it relates to your individual needs, you got to seek out those professionals and let them charge you a fee. But fear not, they've taken the fiduciary responsibility test, so they're looking out for your best intentions. But we're content providers, a software company. Anything you see or hear in this upcoming webinar should not be construed as investment advice. The old "you're not alone with trade ideas" slide. This is where I really want to point towards people who have not subscribed yet, because what we've got is a 14-year-old technology here that's very deep in layers of value and tools and scanners. And so there's a lot of stuff going on. It's not exactly something that can be learned overnight, and we recognize that. And so we have the afternoon webinars, such as we're doing right now, Monday through Thursday at 5 o'clock Eastern. And then Friday, we switch gears to 11 to 2 Eastern with an open forum. We call it the Friday support session. It's an open, come one, come all. You don't even have to be a subscriber. You can come in and kick tires, ask questions. Can Trade Ideas do this? Can Trade Ideas do that? And we make ourselves available for 3 hours every Friday in the same format you're using right now, the GoToWebinar format. Skipping over to the right here is Barry's room, a popular, slowly growing room. The word is getting out because Barry knows what he's doing in there. And as I heard today, a couple of good traders, Dusty and Real, also contribute to the group, and they had a couple of really nice calls this morning, as I saw in a recent note this morning. So it's a great trading room, and the best part is, guys, it's free. Free is a very good price, and honestly, I think it's maybe taking market share away from some other decent trading rooms out there, but you can't argue with free, and you can't argue with Barry, who does a great job moderating the room, with Real and Dusty and some of the other guys in there calling out great ideas of trades in real time, as well as Trade Ideas platform support. A lot of times if somebody has a simple question, and they're in this room, Barry can go ahead and just give them, point them in the right direction. So there's that, and that is during market hours, Monday through Friday, bell to bell, pretty much. And then lastly, one of our newer items here at the bottom, if I can get rid of that little floating island there, get rid of that. Okay, disappear. Monday through Thursday, we have morning classes now. We're no longer doing the one-on-ones. Our product is becoming too popular that we've grown out of our ability to do one-on-ones with the amount of demand and the amount of people that we have here available to do that. So we're switching to a group session, which we have done for a couple months now, getting great feedback from it. Basically starts off on Monday and Tuesday in the basics, and then Wednesday intermediate, Thursday becomes more advanced. And it's a great, we call it Trade Ideas University. You can come as many times as you like when you're a subscriber, and we've got pre-canned content, and we'll do some questions and answers at the end. So all of this together on this slide, guys, on just laying it out there that we present ourselves as often as we can for support and help on this very unique product that we call Trade Ideas, which of course leads to parabolic subscriber growth and retention. We're happy about that. Thank you very much. All right. Let's see. I got some questions coming in here. What's going on? Please share the link to the trading room. Okay, I can do that, or maybe Andy can do that while I'm talking, Carl. Could you give all this time? I don't know what that necessarily means, Seb. But what I'm going to say here is man and machine, and we are the human beings combined with Trade Ideas, which is the machine. And so no man is better than a machine, but no machine is better than a man with a machine. And I've got a couple of ideas to tie that, to correlate that when I get to the Holly section today. So today's market recap is, today's agenda, I should say, is the market recap. We'll talk about where we are in the range, what's happening. I'll remind you guys, we have a big FOMC committee meeting tomorrow. We're going to find out if interest rates are going up again and what they think about interest rates in the economy. People pay close attention to the Fed's language. Is it dovish or is it hawkish? We're going to see some fireworks tomorrow, probably. We're going to see a lot of afternoon price action going all over the place. We'll talk about that. The Holly recap today was showing us the way very early on. The path of least resistance was clear. The trade of the week, which was uniquely triggered 3-4 minutes before the close today. And I'll explain why I'm happy that happened and how we selected this and why we selected this. And then we've talked a lot about the ebook that recently came out that we all had a part in authoring. And I want to just maybe pull a couple of concepts from a chapter or two from that book and make that part of the content today as we get towards the end, and we'll finish up on maybe 4 or 5 chart requests. That's been kind of a popular segment lately. Okay, so let's get right into it. I'll minimize that. And let's go right into the SPY, which I already have up. And let's make this nice and big. Okay, I have adjusted this line just a little bit to represent more of the recent peaks and showing the wedge that is truly being built here with the declining trend line here and then the rising 200-day moving average here. We have a ball that's slowly just being painted into a corner here, and this corner is going to probably resolve itself here pretty soon. It's either going to resolve itself to the upside of this downtrend, and also I'll speak to this orange line here. That is a pivot line I've been working with. And on the downside of our wedge is the upward sloping 200-day moving average. I think we can all see how the price, for the most part, has been gravitating, bouncing off that 200-day. But the price wedge is getting narrower and narrower. What's this line? Well, again, this line was one that I looked at going back with this kind of a trough we had back here. And it was a nice base building on the 15-minute chart. And it also corresponds to support here, support here, resistance here, and a breakout all the way back here. We've got resistance here, support here, and then it turned into resistance. So this pivot line has gone from the support to the resistance camp back and forth a few times over the last few months. And again, you can see in this chart, here was last year in January, buy the dip, narrow candles, and all of a sudden, by the way, this is where we released the ebook for what to do when the market changes, and then we had wild candles of volatility bouncing back and forth, almost like we grabbed a string and plucked it, and it's kind of trying to find its center now as it vacillates back and forth with less amplitude each time. So I think we're getting close to a resolution. It's interesting to note that this pivot level, again, has been very strong. Yesterday it held up very strongly. There was no follow through above that pivot line. The pivot line is also now very close to the blue flat 50-day moving average line, which is also sitting right on top of this declining near-term downward trending line. So there's a lot of stuff happening right here in this 267.50 to 268 range. A lot going on here, and we'll see if the bulls can get a resolution. What do they want to see? Well, they're going to want to see prices above that and then close and hold above that. So if we can get a close above 268.80, 269, well, then the bulls have something to cheer about again. If we can't, then we might be headed right back down to this 200 moving average again to test the moving averages. But we are back pretty much in no man's land, and I'm calling it no man's land because we're below this pivot. And we're below the declining 50 and the declining 20, the declining trend line here. But I think we're going to have resolution soon, guys. Now back to tomorrow. Tomorrow is the FOMC meeting. Basically at 2 o'clock Eastern, we're going to get over the wires the interest rate policy or adjustment up, and why they decided to do it, or if they don't, why they decided not to do it, and have some explaining to do to the market. But it wouldn't be a Fed day if we don't basically take out the prior highs and lows before 2 o'clock Eastern on that day, because the volatility cannon gets definitely shot off tomorrow at 2 o'clock Eastern. So getting back to today, not a bad candle. I mean, a really nice bottoming tail, but it's still, jives with what we're saying. Here's the 200-day downside, and here is the upside pivot and downwardly sloping trend line. So we're slowly getting painted into a corner here, guys. It would be a guess, really, for me to say I'm definitively bearish or bullish one way or the other. hey, in the good camp, Apple came out today. Can't see it on here, but they had decent earnings after the hour, so that's going to help the market tomorrow. On the plus side, giving a little bit of it back here as we speak.
It is.
Yeah.
Yeah.
On the downside, what was my downside argument going to be? We just can't get back above this pivot. This pivot has been so difficult. You know, we go back to these couple days here, and we were like, okay, maybe we're out of the danger zone. Okay, we had 3 days that closed above that pivot, but then the price dove right back down and got hammered pretty much 3-4 days in a row, inability to get back above that pivot. So that's on the negative camp side. And then again tomorrow, again, we just got to see what the Fed says. Other than that, you're guessing right here. But you know, I don't like the fact that we can't get back above this pivot. So that's going to be the major consideration for me. 267.60-ish roughly. If we can get a close back above that and get out of this congestion and close somewhere up here in this white space, that's what the bulls are going to want to see. But if we don't see that, as I mentioned yesterday in Jamie's webinar, look at this level here. Pretend like you're standing, you know, on a 3-story building and you drop a ball, and the ball bounces, and then a little less amplitude, and then a bounce, a little less amplitude. And, you know, if these don't get resolved, eventually that bouncing ball is going to look to try and find the crack in the ice. So the bulls are really going to need a reason to get a close back above these lines that I have drawn in the sand here. Again, basically anything above 268.80, a close above there is probably going to be a good thing. Looking at the Qs, I'm going to keep these 3 notches intact because those are still kind of head and shouldery looking. Head and shoulder tops can occur very often after a long bull run, which is what we know we've all had. And today, a nice buoyancy. And still under its 50-day. Basically what the Qs and the NASDAQ are looking for, they need to close above this 50-day. And so we'll just keep that as simple as possible. Today was a really nice green candle, which gave back everything that was lost yesterday. But as I said, we're kind of languishing here in no man's land until tomorrow's Fed meeting is on the books and people can react to that. Skipping to the Russell 2000, a really nice bottoming wick in the Russell 2000, the low cap stocks, small cap stocks. This ETF index is really holding up the best out of all of them, to be quite honest. So nothing to say really there except of the 4 ETFs I'm looking at, the Russell 2000 small cap seem to be holding up the best. And then lastly, the Dow put in a nice hammer candle here at the close, or a bottoming tail, whatever you want to call that. So, you know, we can see as we get down here in these levels, the price action sucks right back up. But then if we get too high, the price action throws us back down. So here we are again, pretty similar to the spiders in this wedge that we've got going. We could probably redraw this just a little bit if we had to now that we basically have those highs. And there's our wedge for the most part in the Dow. So keep an eye on this technical wedge that's forming across the board, and that's really going to tell us what direction we want to go at some point. Right now, it's pretty much a guess. Anything you want to add, Andy?
Yeah, well, you painted a great picture. Just go back to the SPYs, and I think you know, a break to the downside could be more extreme price action than could find to the upside. And the reason I say that, because there could be a lot of damage. No longer do you have a really pinched in wedge right here, but if Steve didn't draw it, but the line would go right at the bottom of those wicks and just above the 200-day. I wasn't asking you to, but go ahead.
It doesn't matter. I want
to. Just use the bottom of those wicks there, I think, to be perfect. Uh-oh.
You know how this thing can be when I get.
Oh, I know. There you go. Yeah, perfect. So, and what I mean by a lot of damage, not only do you have a very tight wedge, but you also have the 200-day moving average we've been pounding on now for 3 months. And I do mean pounding. I mean, we've gone down and attacked this thing, you know, like 6 or 7, 8 times. And so you have a lot of people that are obviously buying on the 200-day moving average. So if they're wrong and we do get a sudden break out of this wedge and then down below that 200 with you know, any sort of volume at all, that's one thing we haven't had yet, is volume to the downside. Not extreme, but yeah, I think you could find a lot of people on the wrong side. So The reason I'm saying if I would be watching this more closely, especially if I'm long, in a swing account or a long-term account, that if we do break to the downside of this wedge and break that 200, that could have a big impact, and I would expect it would be a pretty decent move, sell
A
off.
lot of the institutions like that 200-day, and they're well
Mm-hmm.
aware of it. So if we break down through it and find that crack in the ice, if capital IF, that's the people you don't want to upset, the institutions, because
Mm-mm.
they're the ones that move the big oil tankers around this market.
Yep.
Yeah, that's where we are. We are in
Mm-hmm.
Wedgeville,
We
guys, and
are.
I'm hoping that we really get a resolution here very soon. We'll see what the Fed has to say about that tomorrow as they continue with their um, worldwide, global, never before tried economic experiment that they've been doing. Who knows how it's going to end? All right. Okay. So markets, no man's land, in a wedge, resolution hopefully coming soon. Need to close either above or below those wedges to get a feel. Now, don't forget, guys, on the trade of the week, this line down here in the SPY about 257, or it was called 258 roughly. That was the line that was set to be the trigger for the SPXU. So, keep that in mind, or draw that on your charts, or give yourself a price alert and remind yourself that the market does break and takes out that level. I think we got a good head start to take out these remaining little bottom wicks down
Mm-hmm.
here, and that would not be pleasant for the bulls at all.
Mm-mm.
Wedgetropolis. Yes, that's a good name for it. That's where we are. We are in Wedgeville,
Mm-hmm.
Wedgetropolis. All right, so moving on. What are we going to do next? We're going to do Holly next. Okay, guys, what do I always say when I come in for the day? I take a quick look at what are the strategies. My notice was we had 3 shorts coming in today and 4 longs. If we sorted them by score, they're pretty mixed up there across the board. All right, and then I'm gonna go into some screenshots. So I
Okay.
try when things are happening in real times, guys, and I know it's my turn to do a webinar. Try to set up some screenshots so I can help paint the picture without having to say, imagine if you will this, and imagine if you will that. So here we are at basically 9:45 Eastern. It says 6:45 because I'm in California. And one of the things I always talk about is Holly, the unemotional AI that's our assistant, trading next to us with no emotions, just statistical probabilities. A lot of times, if we keep it at the 30,000-foot view, we can get some clues. What we do not have here, and a lot of people, it's a running fun joke, hey guys, does Trade Ideas have an alert that can show me the stock right before it's about ready to fall down and go short? Well, no, I wish we did, but that would be a crystal ball. And in good faith, I say that. It's a good question, but we don't really have the ability to predict when something is going to do something with a crystal ball. However, you have something that's pretty close in terms of maybe directional bias, and that is the AI Holly. So what happened? The first 3 trades that came out within a minute of each other, 3 shorts came out. And what have I said, guys, to pay attention when you see Holly spit out 3 shorts in a row in this type of market? Pay attention to what the general market is about ready to do. And this was a great example of that happening. Within the 15 minutes of the bell ringing, the AI showed us today that if you were coming in here itching to buy something on the long side, the AI saw no statistical probability to do so. As a matter of fact, it was basically showing us the path of least resistance for the first, in hindsight, for the first half of the day. But in the moment, it's showing us the path of least resistance in the moment is short. All right. Another thing I want to call out here, XOM and SLB. These are 2 similar stocks. These are oil service energy stocks. Okay. So what I did, and that's why I have OIH on the screenshot that I included here, was I quickly put up the OIH chart. Even though the SPYs were starting to fall out of bed and the NASDAQ was kind of holding okay, the OIHs were like, I want nothing to do. I'm heading back to lows. And so what I'm saying is if you guys catch not only a directional bias, but maybe a sector bias, such as the oil sector here, put up the oil sector ETF and watch that, and it helps keep staying power. That was, visual number 1. Visual number 2, the thing continued to go to lows. Holly continued to create more profits on the downside. The shorts stayed in the game. Visual number 3, it's even lower. This is what I would be keying off of if you were in these trades or using these trades as a bellwether for shorting oil stocks. And so there was 3 quick snapshots I just wanted to show you that right off the bat, the AI gave us directional bias, and it gave us a little bit of a hint of some sector bias weakness as well. The third one I'm going to save for the next segment. So those were a couple of screenshots. That's what I was working with, looking at, observing, and talking to Andy and the other guys about in real time. So I wanted to screenshot that for you to see right out of the gate today. Holly gave us a nice directional bias pretty early. So beyond that, I know Andy has a few thoughts. I'll let him maybe take over and talk about it.
Yeah, sure. Let me just steal this from you real quick. And let me get a clean monitor here. All right, so Steve was telling you, about the sector bias along with the directional bias we had early in the morning. And I can remember right when these trades went off, tweeting with the guys. We have a little place where we chat, very much like Skype, and yeah, I remember saying, oh, I love these oil trades. And you guys, I was mentioning this actually last week, and I was showing you when these trades go off, what to look for. Well, now I'm going to put this on early this morning at the time the trade went off. Let's take a look at 8:45 my time. I'm on Central Time, so what I'm going to do is take this sector analysis. I'm going to use historical date, and I'm going to put it on 8:45 a.m. and hit OK. And as you can see, guys, right from the get-go, look at the bottom 3 sectors at 8:45 this morning. So it's very important if you see a symbol that you recognize the sector it's in, and you'll learn them just by spending hours upon hours of screen time. These things will start coming to you. If not, Google the ETF, find out what major stocks. You don't have to get all of them, but get the top 5 or 6, and put them on a Word doc or something so you can start memorizing those things. Obviously, this is Exxon's more of a conglomerate, but still, you look down here, you see oil is down, you see the OIHs are down. So it's telling you right now, the oil sector is not in favor right off the get-go this morning. So these, and not only that, you had the market working. There's a lot of stars lining up in these 2 trades. And let's just take a look at them. Here's Schlumberger. You can see where the alert went off. Now, I was watching it, gave you a little bit of a time to get in. I mean, it gives you time to, go over here and take a look, do your research, and then, hey, you had a nice little trade there. I don't think Holly could have traded it any better. She bought it back down here, and you can see oil did have a bounce. Let's take a look at Exxon this morning. Same thing, very similar. Remember, these went off at the same time, 1 minute apart. There's your buy signal. Very, very little pain, if any at all. I'd have to put it on a 5-minute to tell, but man, what a beautiful trade. Look at this. You had 1, 2, 3, 4, 5, 6 red bars in a row. There was a little meat left on that bone, but hey, that's not a bad exit on risk off, timed exit. You can see both of these got out on timed exit. These by far in risk off mode were the biggest trades today. Steve mentioned the FOMC this morning. He was talking about, there's a good chance, we're going to bounce because everybody's going to be waiting for the FOMC. Those are kind of things, you're talking about macro events that you can keep in your back of your mind. Whereas if you're a trader, maybe you want to stick and risk off today. I mean, not look for a huge sell-off and just go ahead, and get out with Holly, or take half off, and then when you do get that bar reversal or whatever, take the other half off. But nonetheless, a lot of things were stacking up in your favor this morning as these trades, fired off. Those were by far the 2 biggest winners. You can see. I want to add one more thing. We always talk about man with machine. You have to use some common sense, because let's take a look at the entry times today. All right, 1, 2, 3, 4 shorts in a row. And let's pull my spiders over here, right there, and let's just put it on a 5. Now let's just zoom in. All right, so market is selling off. You got Holly firing off 4 shorts in a row, and then you have a long come in. Now on risk on, it finally worked, but you know what, man with machine. Okay, Holly has these strategies in her, and they're based on statistical analysis and optimized strategies, back tested over and over. So all the filters were being matched right here, and this was lining up for a potential good trade. Okay, but if you're sitting over here and you're looking at the directional bias is short, and the market continues to bleed down, maybe you want to pass on this trade for the time being. You could always come back in and make a price alert, you know, for if it ever goes back through that buy price like it did. That's up to you. I'm not telling you you should do that, because I know what it is to be a trader, and it's hard to, you know, focus on all these things. But the point I'm making is, guys, don't just, you know, pay attention to your surroundings. Know what the market is doing. Know what the peers are doing. If in the case of Schlumberger and Exxon, and this one, you know, you get a long that fires off in the middle of a bunch of shorts. You know, maybe you want to sit back and say, well, the market's continuing to go down. I'm gonna play this a little bit safer here. So always remember, man and machine. It's not don't come in here and just try to take every one of Holly's trades. But anyway, Steve, I know I rambled on there a little bit, but gave you a little break there.
Gave me a break.
Yep.
Is that it?
Yep, that's it.
All right, send her back over.
All righty.
Talk about the trade of the week.
All right. Uh-oh, there you are.
Yeah, trade of the week.
Did you get it?
All right.
All right.
Yeah, you should see it. Trade
I got
of the week. All right. So let's start with the disappointment that was Sienna last week. All right. Let me do something here real quick. There we go. I think that's. I want to just try and find it right. It's close enough. All right. So here was Sienna looking last Friday like it was ready to break out, and it did. It tickled the breakout on a Monday, and then the next day gave us a little bit of a scare, and then Wednesday, guys, I have no idea what this was, and you know, I'm not happy about it either. It just goes to show you that the market can and do anything at any time for any reason. There was no news this day, but the market making algorithms decided that it was time to drive the price all the way down to the actual stop that Trade Ideas has suggested and bounce it right there. Not the first time that's happened to us, probably not going to be the last time. And again, I'm not happy about it either. It is what it is. Maybe there was somebody out there who wasn't in the trade but caught the fact that it did bounce off this level. And you know, you can play off of somebody's pain, as we used to say. Playing off my pain, you buying that stock where it wants to get me out. So that was last week, and I just want to finish on saying it's going to happen, guys. And to quote one of my friends in the market, Howard Lindzen, if you can't handle the red, you're probably never going to see the green. So you got to take the good with the bad. Yeah, Paul, hang on. I got a lot of good thoughts on that pullback on the 50. It's not working. We actually fixed it this morning, so I will be dropping those cloud links. Don't worry, but I got some upcoming content for you on that, Paul. So Sienna didn't work, laughed in our faces, drove the price down to our stop, and then bounced. What are you going to do? Unfortunately, it's not really making us look bad by continuing to go to new highs. It's rolling over with the rest of them. But that was downright no fun and ugly. So with that said, the failed breakout of Sienna right here on that green day said, well, we're not going to use any of those scans for the next trade of the week, because in this crazy volatile market of shoots and ladders, follow through is really hard to come by on breakouts and breakdowns. You know, even the shorts that we had today, what happened to them? They bounced. So the genesis of this week's trade of the week was recognizing that ABX has been holding up okay, put in a bottoming candle today. Some of the mining stocks out there have been not too volatile, been pretty easy. And so going with the old pullback to the 50 SMA and pullback to the 50 SMA Pro was in the content of that email. We found BVN. And one of the reasons we like BVN over a couple other of stocks that were showing up in there that were mining stocks was that this one had the earnings already. I mean, we are right in the middle of earnings season, and the last thing we want to do, guys, is call a trade of the week that has earnings in 4 days. That doesn't really do anybody any good. The BVN was basically this day right here, that bottoming tail off of earnings that almost got to the 50-day moving average and then kind of popped back up. This was on both scans, the pro and the regular, which just means that the professional version has more liquidity, more volume, average daily, so more people can participate. And so with that said, a pullback alert right off the 50 with no earnings to worry about. That was the call we went with. So yesterday, no trigger, but today, right at the close, what do you know? We did get a trigger. And I was telling Andy right before we went live, I'm really glad it triggered today, because the way this is looking on the daily, we may have a gap up situation tomorrow. And having 3 or 4 minutes before the closing bell rang, the stock did trigger. And the last screenshot that I wanted to show you was the confirmation. As it pushed through highs and triggered, it was doing so with nice, vigorous volume, almost 400% on the 5-minute candle and 10 times volume normal on the 1-minute candle. So that was encouraging to see. And again, I'm glad that it did trigger at the close if somebody got it, because you may have to reach up and grab it tomorrow if you won it and you didn't get it. Takeaways, not looking for breakouts in this particular market until they start working again, looking for safe pullbacks. And that's the one that we found, considering that, Andy brought up a good point, as far as the mining stocks go, gold is the commodity way down here, the low end of its range, not looking that great, but the GDX mining is not below its lows. It's actually hanging out okay. So there's some relative strength in the miners as it relates to the commodity. That's just an afterthought, though. But that was one of the reasons for the selection of BVN bovine trade of the week. Let's see. CN. Oh, somebody's commenting. CN now waiting for a pullback. You know what? I got to tell you, I lost all faith in CN after the washout bounce candle there, friend. In all reality, this type of candle usually should signify that the volatility has been washed out and the coast should be clear for a few days, but we're not getting that in CN. So, I mean, I dig what you're saying. You may be looking for a level, but I don't like the post this candle. I don't like the 3 days post that candle. These types of crazy washout candles should be clearing the deck for any type of price action to even think about lingering back into the tail. So this is just a broken chart to me right now. By the way, was anybody with us last night in Jamie's webinar? I forgot the name of the gentleman who asked. He wanted to see GE, and I said, well, if GE holds true to price action the way this market is these days, we had a filling of the gap here. That didn't work because we tried to bounce off that, and we had a red candle yesterday close below that attempt to fill the gap and hold that moving average. I said, what GE probably wants to do is double dip and let the second mouse get the cheese. That's our favorite old wisdom. Sometimes the second mouse gets the cheese, meaning this became the bogey for the predatory algorithms and stop hunters to drive the price down. Once again, take out that low and see if there's any stops to be run. And if not, that might be your coast is clear. So GE kind of did exactly the scenario we talked about. Hopefully somebody heard that last night. All right. Yeah, CN, I'm not, David heard it. All right. And friend, I'm not that super high on CN because of the last 2 or 3 days. I just didn't like what it did there. So let us move on. We have limited time. We're going to move on to something a little different. You've heard us talk a lot about the ebook. This thing right here, the ebook on the free download, but I'm going to break it open and talk a little bit about some of the contents in there, maybe a couple of contents of the ebook. So I'm going to start by actually bringing the book up, and let's. This is something I'm familiar with. I wrote this content. The buy the dip will easily become sell the rip if the market does turn into a bear and a seller's market, meaning buying the dip no longer works. You're just going to get steamrolled eventually. So we have to flip our minds upside down to sell the rip. And this is a great example here on this Holly chart. This was a short that was initiated by Holly on the blue level. It waited, the AI waited for the market to bounce here, or the stock, excuse me, to bounce a little bit here on NVMI, and then it waited, and then it pounced. That is a classic reversal of what was working in 2017. And if the market in 2018 turns into a bear market, we're not there, but if it does, these are the kind of scenarios you're going to want to try and play. Not shorting down here at the low end of these candles, but waiting for a relief bounce, because stocks have to breathe, and then hammering it on the sell the rip versus buy the dip. So with that said, I know somebody mentioned that the link was not working for the pullback to the 50. Let me drop that in there. Here's the pullback to the 50. This is the one that caught CN last week on there, and there's a lot of stuff loaded here because the way the market worked today, we have a lot of stuff pulling back. That's a beautiful candle right there, right off the 50. So this is the kind of stuff that this scan is going to look for, and it's another gold mining chart, exactly. So let me go ahead, and for the people that said they were having trouble getting this particular one, I'm just going to right-click it, and I'm going to save it to the cloud, share, and I'm going to copy and drop it into the chat window. Pull back to the 50. All right. Now that we have this up, let's talk about this. This is a pullback alert. This is buying pullbacks. This is what we do in an up market, in a bull market. If the market does change and this book does come to fruition to where selling the rips becomes the order of the day instead of buying the dips, this is the kind of stuff, these are the kind of setups we're going to be looking for on a daily chart now. So if it comes to that, guys, I want to show you how easy it is for Trade Ideas users to flip the technology and the platform to help you flip your mind, because trust me, turning your mind on a dime and taking entries that you're not normally used to taking over the last few years is going to be a hard process, and it's not going to happen overnight. But creating some alerts like this to kind of maybe help nudge you might be a good thing to do. So here's what I'm going to do. I'm going to duplicate this alert. I'm going to minimize this one and put it back because I continue to use that one. But let's say, rather than trying to find stocks like this on the daily chart that are pulling back and have a nice bounce at the 50-day moving average, what if we want to find stocks that are doing the opposite? Maybe they've fallen back down below their 50 and they're bouncing up to it. Well, let's see if we can figure out how to do that. It's pretty simple. We're just going to go to configure. Remember, this is the bullish. These are the bullish filters that we're working with here. All we're going to do is click flip. And flipping that upside down gives us this now. What's going on here? GGP just bounced up to its nearest 50.
Below the 50.
It's got to be below the 50, right. Okay, this one bounced right up into its 20, again below the 50. But you see, hopefully, guys, we have stocks that are now bouncing up into their daily moving averages. And that's the exact opposite of AEM, buying a pullback dip that's pulling back to the moving averages. Now we're talking about selling things that are bouncing up into their average. And all I did was create one simple button using the flip to take a simple strategy and turn it upside down. And that's how easy it is to do with our Trade Ideas technology. And what I just did basically satisfies this chapter of that book right now. Okay, on the daily strategy. This chart here is an intraday time frame, but what I just demonstrated for you here is a more swing trade time frame, waiting for stocks to bounce. What happens if you were the guy who wanted to short the stock on the daily chart, called shorting in the hole, meaning I'm going to short momentum? Well, I can tell you honestly, guys, shorting momentum has not worked, and it's a hard time to get to work, because more often than not, you see right here, if you wait to be this guy that takes out this low and then you decide to go short, you're happy for about a day or half a day, and then you're in trouble. What we want to do is try and stop using this breakdown and shorting momentum and chasing momentum to not be the person chasing, but being the person sitting at the bar waiting for the price to come up and then give us a nice opportunity, because entry is key. If you get a good entry, it takes care of a lot of the rest of the trade. It makes it a lot easier mentally and emotionally if you really do nail that entry and do it for good reason and know that you've done it for good reason. I forgot the link, didn't I? Thank you.
Not that one, it's the other one, yeah.
Wait a minute. So I already put, did I put the 50 in there?
No, you didn't get it in there. You did everything but drop it, yeah. I'm guilty of that a lot, yeah.
Yeah, thank you for the reminder there, whoever that was. So let's go back and get that link in there. Save and share and copy. I wrote pull back to the 50, but I didn't paste it. There you go. You guys are on the ball. Thank you for letting me know that, Paul. Okay, now this, I imagine you may want this too, even though all I did was take the link that I just dropped in there and I showed you how to duplicate it, configure it, and hit the flip button. But let's go ahead and give this a name because it's definitely not a pullback to the 50. It's called, let's call it fade the bounce. Okay, we'll just keep it as simple as that. Fade the bounce, short swing. I'll go ahead and drop this one in there, and this one will also work for you all tomorrow. It'll be different symbols for sure, but for those that are starting to think like this is going to be the scan that's going to help you. All right, flipped to fade the bounce, and I probably just did it and completely forgot. My short-term memory is going crazy, but I'll make sure it's copied correctly. Space and paste, and there you go. Okay, so now you've got that. All right, I'm going to close that. The second thing I wanted to talk about, maybe Andy can help me a little bit here, but I do have the scan. It's an actual scan called Short the Junk. And maybe you want to talk a little bit about the concept of this one, Andy?
Yeah, absolutely. Okay. Yeah, probably the best way to do, Steve, is just go ahead and pull up the, if you have it, pull up the shorting junk. There it is.
Short junk. I'm prepared.
Yeah, and let's take a look at the configuration. All right, we're looking for stocks hitting a new low, and if you go into window-specific filters, guys, this is what makes this, and maybe just hit hide unused. Let's see if that covers the. All right, here's some of the key. I'll just go over the key ones. Look at the change in the 5-day. The minimum has to be up 35%. Okay, these are only looking for stocks. You can see there, Steve's showing you right there. The price is at least up 35% from 5 days ago. All right, so we know it's a stock, and if you look at the price, it's only looking for 25 cents to $3.80. So these are what a lot of people consider junk stocks. Okay, they're trading at these levels, but not because they make a lot of money. Okay, and they usually have a lot of debt, and they're just not really going anywhere. So, but these have had a huge move in the last 5 days. Well, the trigger point is position in previous day's range once they get a maximum of 90. So in other words, I'm looking for stocks that are hitting a low, but they're below the previous day's high. I don't want to short them if they're still above the previous day's high. That's why you see the previous day's range maximum is at 99%. And then you have, there's something else in there that I'm looking for.
1% change from the open?
Well, yeah, and the volume, I noticed it optimized better if it wasn't doing an extreme amount of volume in the 5 minutes. So,
which would make sense for stocks that are pulling back and breathing.
That's right, exactly. So if we can look at, I haven't even looked at it today, Steve, but if you want to look at a couple of them, this is still back testing, very well. Today may not have been a good day just because we had such a bounce in the market, and it looks like we only had one. Yeah, okay. that one doesn't do a whole lot of volume. You might want to put a volume filter on this. Is this yesterday?
Yeah, I believe this is yesterday. Let's take a look.
Yeah, had a few more yesterday.
Yeah, okay. So let's scroll out here.
Oh.
Okay.
All right, so that's and if you go to the first one that went off, scroll down to the bottom, see where you first got that alert early in the morning around 1:07. Now these are day trades; they're not swing trades. If you're trying to swing trade this, you got ran over.
Yeah, okay. There's your line right there. That was the that was the first signal. Okay.
All right.
So there's only that one yesterday, and
that one looks like it was at the. Yeah, that's kind of
too low. That's too low volume.
Yeah, I thought I had a volume parameter in there, but anyway, you guys can always take this and put a volume parameter. Just maybe put 100,000 or something like this. Remember, a lot of these things they have volume in the last day, so you don't want to put the volume parameter up too high because they have to be. I have some volume filters in there where they have to be doing a certain amount of volume over the last 5 days, but nonetheless, this is one that you can take, put some volume filters in it, and if you're into intraday trading, this can be a good little alert for you.
Just want to see if there's any more that makes sense. Yeah.
Well, I can see that
And
we well,
we're
no,
getting
actually, that doesn't look like it's that good. But if you look at the percentage move on that one right there, that day, that EYPT went off at 243 at first, and traded all the way down to 220 pretty much. So that's actually a pretty big percentage move. See the day how low it went that day.
uh-huh.
Yeah.
From
So
there
it
down
finally,
there.
yeah. So doesn't look
But
like much on a chart, but you're looking at you're looking at over a 20-cent move in a $2 stock. That's a huge percentage move. That's a
I,
10%
I,
move.
I think forget those 2 green days. Perfect. Forget those 2 green
Yep.
days there. This is the kind of look that it's looking for, right, Andy?
Exactly.
Looking for
Exactly.
exhausted movement after a nice 3 or 4 day move, 5 day high, and then low volume
Hmm.
exhaustion. Red bar starts to come in, take out the prior high of the close of the prior day, and then you're starting to get into this is the shorting the junk
Hmm.
strategy right
Yeah.
there. So I went ahead and dropped that cloud link into the chat window for everybody as well. Just wanted to have Andy jump in and kind of give you a quick explanation, since that one's his baby, and how that one might work. But there are two, quick examples from a couple pages of the ebook, what to do when the market turns and buy the dip no longer works. So
Hmm.
hopefully that made sense to a few of you guys here live and a few of you watching on video replay. The cloud links are in the chat window. Looks like we've got a few minutes to play here, so if somebody wants to throw a few charts, symbols, we'll do three or four, five maybe. Just take a quick look, and if you got one you want us to look at, we'll put us up an extra pair of eyes on it and see if we see something that maybe you missed. It always helps to know if you give us a symbol to look at, if you're long, thinking short, or what's going on. So Don wants to look at Netflix, and by itself, I always assume that people just want to see how it looks on the long side. We're going to look at dailies here. Not bad, Don. Not bad. It could be. This is what I was talking about on that Sienna candle. After we see these types of candles, we need to see movement at least higher. We're getting that. It's holding its own on the 50-day. It seems to have held it from the 50-day back here. It didn't like being below the 50-day here. I'd say if you have a 50-day moving average on your screen there, the stock does not like being below it. And if it does want to trade below it, then you might have some risk management to consider. It could be a nice pullback. We did fill the gap and then some, building a base. There's no reason to think that this couldn't move higher and start to maybe, create possible cup and handle look here on the daily chart. But not if the Dow is down 500. So keep an eye on what the market's doing first. All right. Let's see. That was Netflix. Now we're going to do Bank of America long. Seeing kind of head and shoulders back here, and I'm seeing price action that's having a really hard time holding up. However, today we did sell off and we did bounce right back up, very similar to what we did last week. I'm not really seeing anything compelling here. The moving averages are slowly starting to roll over, and the price is trading below all three moving averages. I would keep an eye on the XLF or the KBE, the bank index, and as you can kind of see, they all kind of look alike. XLF looks very similar to what you're.
No man's land, yeah.
Yeah, they're kind of in no man's land. I maybe might want to wait for some resolution on the Wedgeville that we're in that we talked about earlier. That was Boeing, excuse me, not Bank of America. What am I talking about, Steve? I'm confusing myself. Boeing is not related to the XLF and the KBEs. I'm so sorry, guys. So let's scrap that. But still, under these moving averages, it's got a little work to do. I'm not really seeing anything super convincing on that. And since I went ahead and tripped all over myself on Bank of America, it looks just like
Boeing.
No. They look alike. But nothing really spectacular on Boeing that really gets me excited. David, XPO. Do you think XPO might be broken now? Still watching it with a long in my mind. Well, it's riding that trade ideas logical smart stop right there. It's where it was 2 or 3 days ago. This is transportation. So let's go to, what is it, XTA? What's transportation again?
What is it? Help us out, friend.
We have it on our list.
Yeah, hold on here. IYT.
Thank you. Okay. So IYT, that's what your sector looks like. Here's these 3 down days that got pushed back up. So if we go back to XPO, similar type action, boy.
Yeah,
I mean,
here's another thing that scares me. You had a really nice bounce today in the market, but rather didn't really participate at all. It closed closer to lows, So I'm not, it's definitely something I wouldn't jump in down here. It's well above
cost
this
of oil.
200 day, but yeah.
Cost of oil's not helping either.
Right.
It's, you know what? This just looks like Bugs Bunny hanging by one fingernail on the ledge with Elmer Fudd ready to hammer it. So, if you did decide to go long, well, your out's going to be really, really tight. So that's the good news. But you might have a wish and a prayer to get it back above. These moving averages are setting up and kind of still holding the price hostage.
You've had one green day in the last 2 weeks. It's just a lot of selling going on there. And that doesn't mean it can't exhaust itself, but for right now, I'm just not seeing anything that would excite me about that.
Earnings too are coming up in a day and a half.
Yeah.
So it's probably waiting for earnings, David.
Could be.
All right, well, David, that was the last one sent in, and that was a good time to thank you all for the participation, the questions, and the comments. Going to go ahead and turn it back over to Scott now. He's got some announcements, especially as they relate to podcast, ebooks, and promo codes. Oh, my. Hello, Scott.
Hey, thank you. Yeah, so a couple items on the way out. We have a podcast. There's a new one out usually every Friday, and there was a new one out this last Friday, so you should listen to it. Just search for Trade Ideas Podcast in whatever application you use to listen to podcasts. Pretty easy to find. Add subscribe, and you'll get the newest episode, and then you're ready to get the next episode this Friday when it comes out fresh off the podcast press. So do that. It's a really good info for you. You should listen every week. The episodes are usually 15 minutes to 30 minutes. Great listen on a Friday or a Saturday. We've got an ebook out. Steve was talking about that earlier. Best way to get it, trade-ideas.com/ebook. Just plug in your email. You get an email with a download link in your inbox, and then save it to your desktop. Put it on your tablet next to your desk or whatever, and reference it. Good ideas. There's 5 good strategies to use. No excuse not to have it. We have a promo code that will take 15% off your first month or year of Trade Ideas Premium or Standard. Also good towards an upgrade from Standard to Premium. So you can always upgrade from your Standard Trade Ideas to Premium Trade Ideas using one of these codes. This one's Mayflowers, all caps. You can also download a handout with this code and some of the other slides. Just go to the Handouts panel on your GoToWebinar interface and click that little Trade of the Week codes for May 2018 PDF download link. Any questions at all, send that to info@trade-ideas.com, or you can reach out to Steve or Andy directly by email. Steve is steve@trade-ideas, Andy's Andy@trade-ideas. And make sure you're following us on Twitter and Facebook and all those places. Steve Gomez is Today Trader on Twitter. He's got a lot of good tweets. Follow him. Dan Merkin's Trade Ideas 1. We also have Trade Ideas. Jamie Hodges, QuantBot. Facebook.com/Trade Ideas Pro is the page to like on Facebook, and then you can share everything you like that we post with all your friends so they can find us. Thanks, everyone. We'll have a recording of this up later on tonight or tomorrow. Thank you, Steve and Andy.
All right.
Thank you. Thanks, everybody.
Next time.
See you Thursday.
Have a good one.